Yo, what's going on, guys? Okay, so this video is going to be focusing on the power of three when it comes to the markets in cryptocurrency. Now, it's not just cryptocurrency that this phenomena of the power of three exists. All right, it can be done in stocks and shares. Look at commodities, futures, you name it. And the reason why we call it the power of three is because it's a focal point in the charts where the market maker prepares price to go in the opposite direction. Okay, so why do I say the power of three? That's just because I say it. It kind of sounds good to say it, but we live life on the basis that three is the magic number. Okay, now let me take you back to how it works for me. Back in the day when I was studying about, various systems that I could use to try and exploit the markets, I was always coming across this common theme about three hits here, three tests of this zone. You've got for example, you've got the triple bottom pattern, you've got the triple top. Three seems to be a key number when it comes to the markets, but it's not because of the markets. It's psychologically ingrained in our minds to believe that good things come in threes. Okay? But at the same time, bad things come in threes as well. Now listen, if you are new to the channel, mad love and respect for passing through. In this channel, we talk about how to understand the movements of the markets in relation to the guys who pioneered this beautiful business model at exploiting retail traders' liquidity. Now that's the sad truth about this game. It's all about one man's fun and another's hell, because that's the truth. It's a zero-sum game. So what do I mean about the power of three? Well, let's just go back in time a little bit. How do we understand the concept of the power of three? Well, we know the market maker likes to manipulate traders. So here is an example of the power of three. You have got 1, 2, 3 hits to the high. Okay? You've got 1, 2, 3 hits to the low. We dive in closer and you can of course see that they do it here as well. Look at those vector candlesticks. Why do they do it in threes? 1, 2, 3. Stopping volume, shift away from the zone. Yeah? Let's keep going back, just so that you don't think I'm losing my mind. Again, 1, 2, 3 hits. They reverse it back down. All right? Couple of more, just so we've got it installed in your minds. Again, what have we got here? We've got the notable ones. So you've got 1, 2, and we'll count this one over here, 3, just for the nature of demonstration. 3 hits at the moving average, they reverse it back down again. All right, look at this move to the downside right here. You've got 1 notable push, 2 notable pushes, 3, and then they reverse back up, and then of course they come back down again. Yeah? And finally, what have you got here? This is the good one. Check this out. You've got 1, 2, 3 hits, reverse price. So how can we use the concept of three when it comes to actually working out when to enter and when to exit? Well, first things first, you need to establish where you are in the chart. Okay? Look at the cycles that we wait for. When we're looking for the peak formation, you've got the W formation right here. Rise up level 1, rise up level 2, rise level 3, peak formation, drop level 1, drop level 2, drop level 3. It seems to operate in threes. Level 1, level 2, level 3, level 1, 2, level 3. Okay? That's how it works. We're trying to establish where we are in the cycles. And once we've established the cycle, we're going to understand that they're going to try and induce traders to believe it's going to continue. You see, the psychology of the trader is this. When he sees price rising to the upside, he thinks, okay, I've missed out on the move. Let me wait and see if it's true. It's pulling back down again. He then thinks, okay, I've missed it. It wasn't going to continue higher anyway. I'm glad I didn't take the trade. It then moves up again. He's like, okay, it seems like things are actually starting to move up. All right, I think I might make an entry. Oh, no, it's starting to drop. Then he says to himself, you know what? I think it's actually, if it can hold this point and it's actually going to move higher, I'm going to place my trades. Bang, it moves up again. A retail trader solidifies in his mind that he's read the market correctly, because if it's moved up twice from here, it's going to move up again the third time and continue higher. Okay, but then look what happens. Price reverses, comes back up one more time. The retail trader is solidified that this move to the upside right here is going to be replicated on the retrace back down, and then it's going to move back up and continue higher. All right, and that's where you would see a breakout to that range. But what usually happens is the M formation itself sees price move up to this point, comes back down, and then this area here, the second leg of the M formation, doesn't break out the higher point. But the retail trader doesn't look at it like that. He just thinks that it's actually taking its time before it decides to break out. So that's why he always goes long in these areas here. And likewise, he always goes short in these areas here. All right. Check the brightness on your phones or your computers for a second. I'm going to flip over the chart for you just to put things into perspective. There you go. So look, this is the High Block Capital platform where it shows you the potential liquidation points in Bitcoin, in Binance, in the given range that we have right now. Okay. If you notice the green dots, as you can see right there, this is where people are going long. So $69 million worth of orders came in long. Look at that. Look how many times you see price get pumped up in orders. 1, 2, 3. What is that? What's that story about? Why is the presence of 3 so visible there? We've got the same story over here, right? You got the same story right here. Look, 1, 2, 3. They are different orders. Yeah? You've got 75 million of long there, 87 million long there, and of course, $67 million longs opened in that zone. Why do they bring it back down all the time? Because the retail trader is of the belief that if it can push once, twice, the third time, it's going to run. Okay? That's why. Look at it. Just look at it in the chart. For every peak that you see Bitcoin hit, it always pulls back. We've even got it now in the charts, ladies and gentlemen. We can see that they've hit the highs once, twice, and there's a third hit up here. What will become of this third hit? Yeah? It applies to any coin, any asset. Here you go. Let's look at dollar yen. All right, this is Forex. Where do you see the presence of 3 in this move to the upside? Here we go. So you've got one zone, 2, 3 hits to the high, they drop it down. They are doing this to induce traders to commit liquidity. Because the trader in the first instance, the retail trader, isn't going to catch the lowest point because he's not programmed to believe that that's the point he needs to get in. When he gets to this point right here, he's missed the move and he's thinking, okay, I need to keep an eye out on it. And that's why he ends up going long in this zone right here, because he just waits for confirmation. But then, as you can see, price comes back down again. He now thinks that this pattern is going to continue up. And then it reverses back down. And then, of course, it comes back up, doesn't take out the previous high right here. And then they retrace back down again. So all those guys that went long there in dollar yen paid the price. Yeah? Let's take another asset. Let's have a look at... Here, we'll switch it up right now. Let's go to some stocks. Let's go to Apple. Let's go to Apple. Here we go. What do we see Apple do? Pretty simple, yeah? You've got to be paying attention with stocks itself because it's quite tricky. Here we go. So what do you see? We see this move to the upside, all right? And it's easy for me to talk in hindsight, but I promise you, apply it to the charts. When you see one vector candle, you're anticipating another zone to be taken and then the final zone because they've moved away from the moving averages. So that means momentum is present in the chart. So you've got to ask yourself, at what point will the market maker initiate the reversal? Because he hasn't got enough interest at the second push, but it's always at the third push he's going to initiate a reversal because he's got the most amount of liquidity, and most of the people that are coming into the chart at that point have the fear of missing out. So that's why there is so many orders exchanged at the highest point and, of course, the lowest point in the charts. Yeah? This is Apple. Here we go. There's the presence of it again. Vector candles. Zone 1, Zone 2, Zone 3. Bang, it reverses. Now, let's be honest, guys. All right? When anyone would witness Apple doing this move to the upside, you would think it was going to continue because it's got such strength. They probably made a declaration. Apple is up for the day. It's moving up. Potentially could take $170. In other words, people are excited when they see these big candlesticks. And you as traders need to be aware of that these moves, 1 push, 2 and 3, are designed to trap traders to commit liquidity. Because when you look at it like this, all right, let's just look at it from this perspective. This is Apple right now, but the concept is still the same in Forex, in crypto, everywhere. Okay. As a retail trader, you look at Apple there, you are definitely saying there's nothing happening in that zone. Not doing anything. Okay. Even if you zoom out, you would say, okay, yeah, it's moving up. You can see there's a bit of a trend happening, but in this zone right now, you can see that they're not really doing much. So what is the market going to do? How are they going to encourage people to commit liquidity into the assets and stocks and whatever it is you're trading? All right. So we press play. Oh, there we go. We see a nice little push up to the upside. Naturally, as traders of the hybrid system, we would say to ourselves, okay, I'm expecting at this point a retrace back down and then proof that this move is going to continue higher. If they don't retrace back down, they're going to come into the 5 and 13 EMA, and if they can bounce from that range, their momentum is solidified. I expect them to move higher and potentially try and take out 1 second zone up here. All right, so here we go. 1, 2, 3, there's the second zone. So they held the 5 and the 13 EMA and they move away from the zone. Now, what I'm trying to get at here, guys, is not trying to show you how great I am at hindsight, because that's not the discussion right here. The idea is for you to come and find these points in the chart, go back in the charts and find these sort of plays and just reassert it into your mind and be familiar with it, so that when you do see a push by any coin, any asset, any commodity, all right, you are going to be in the presence of belief that if they're going to continue higher, you'll need to see tests of the 5 and 13 EMA if the move is big enough. And of course, you could project out where they're likely to end up based on the volatility of the move away from a particular moving average or whatever it's been doing in the meantime. You can see right here that they've got a W formation in Apple, rise up level 1. Next level, rise level 2. Okay. Press go forward. There's your second move to the upshot. The level 2 retrace right there. And then they come down, testing the pattern, spike up, failure to continue forward, and then it keeps moving up and up. Oh, what am I doing here? Here we go. So you've got level 1 zone right there, rise level 2, drop, rise level 3, up there, rise level 3 peak formation in this area. And of course, we're waiting for them to formulate a pattern to actually come back down again. And as you can see, there's the M formation right there. Seems like the support, they've come up again. 1, 2, 3 hits to the high. All right. And you can see what's happened there. So the presence of 3 is present right there. You can see it. Look how it's played out. The presence of 3 comes straight back down into the range. Look at what they've done. They came up, hit 1, 2, 3 hits to the high. I don't count this one because it was lower than this one here. So this 1, 2, 3 hits to the high. So your goal is to try and understand what is the relationship with these moves to the upside or to the downside, and see if you can factor in the next move based on the presence of 3. I hope that puts things into perspective for you guys. It's just a brief video in helping you understand when I say that they push to the zones, you know, the power of 3 just puts things into perspective for you, so that you're not blindsided by the moves of when you see them move price higher, okay, and then they come back down and you think, okay, we're going to go short from that point. If you see the presence of vector candles appearing in one zone, like for example right here, you would expect them to do it again, okay, which is what they tried to do today, but they seem to be spiking up and down. All right, there's not been a follow through or a commitment by the market. Okay, so we just got to keep an eye out on this zone. But Bitcoin has been showing this behavior non-stop, ladies and gentlemen. Okay, see, here's an example of it here. You see the presence of 3. 1, 2, 3 hits to the high, then they reverse it. And now there's different ways they can do it. You can see that you've got one vector candle here, okay? Then you've got one bigger vector candle here, and then you've got these vector candles right here. So when you're working out the presence of 3, is it going to be a cluster of candlesticks all together, all right? Like so. Or is it going to be just individual candlesticks that move in single file as such? So you've got one candle right here, you've got another candle right here, and then towards the highs, you've got just maybe a couple, and then it drops down again. So I hope that puts that into perspective for you guys. Remember, be sure to subscribe to catch up with tonight's live so that we can finalize what Bitcoin has done in the New York session itself. All right? Mad love, excuse me, let me start again. Mad love and respect to every single one of you people. All right, take care of yourselves. Peace.